Mic check 1 2 1 2. I was having some visuals issues, some camera issues, but I'm back. We're back. Welcome to the show, guys. Hope you guys doing well. Welcome to the show. Hope everybody's doing very, very well. We got a lot to talk about. What's up, Jay? What's going on, brother? I didn't think I was going to be able to come on. My camera wasn't working, but I think we're good. Another hand clap to you guys. It is a Wednesday. We got a lot to talk about, man. I got my late coffee and we're going to get into it because I think at 1 o'clock my time, we got the Fed meeting. We're going to react to that as well. I got it all queued up. I don't think I don't think anything is going on right now, but I got it queued up here and we're going to go to that at 2:30 Eastern. So it's going to be 1:30 my time. So I kind of set the live to come on at this point in time. I'm going to get into the market. Got some things to say about I'm talking about a major mining group conglomerate that's partially based in Texas here that I know about that filed for Chapter 11. It's pretty interesting what's going on with the miners, with the BTC miners. You got an L2 fork that's coming up. You may have a possible hard fork within the main net. You know what I'm saying? So Bitcoin is going through some changes. We may get into that pretty deep, but I want to get into the market. We're definitely going to make a smooth transition to the FOMC press conference to see if we're going to get rate cuts or rate hikes, because, honestly, that is what's going to make or break this entire third and fourth quarter, right? If we get rate reductions, obviously markets are going to pump. Stock market is not doing too good as well. Geopolitics, powder keg, situation over there. So, we could use some good news. So we'll see what's up with that. We'll see what's going on with that. But without further ado, let's go ahead and get into the report. Very interesting report that we got for you today. So, what are we doing? I don't need to go there. There we go. So that was twice the duo. So let's get into it, man, because I got so much to get into today. I want to talk to you about a couple of actual altcoins too that are pumping. M45. I don't know if you guys are interested in M45. We're going to be talking about just a little bit, brief introduction into M45. Some pretty decent action there when it comes to those particular alts. It's a different narrative than what I'm used to, and I need to mute my phone too as well. And I want to introduce that to you just in case you're not in, if you don't understand what's going on there, because there's a couple of tokens that are doing pretty well. I think I got that muted. So concerning, and we'll get into a whole lot more too, some Clarity Act update. If the Clarity Act does not pass, you're going to get a movement in the SEC, CFTC. They're going to come in with their own rules. And, it is, listen, all centralized exchanges are going to be actually regulated by the SEC. This is what the actual new markup states right now. We'll get into a couple of videos too, a couple of updates from Atkins, because they have already, basically drawn up their rules just in case. And it's kind of like a backup plan into the Clarity Act. So if we don't get it, the SEC and the CFTC, they're going to move in their rules. And I don't think we're going to like that. In fact, a lot of centralized exchanges are already closing their doors due to the fact that they're going to have to register with the SEC. Okay. So you see Bitmart, I think was the most recent one. You're going to see a whole lot more going into the latter part of this year. And we're talking centralized exchanges. They're going to be closing the doors because the last thing they want to do is actually register with the SEC. They're already doing a lot of mischievous things, right? So they're gonna have to do a lot of reporting. They're gonna have to report the reserves. They're gonna have to do a lot of paperwork, compliance, fees, all that stuff. They're not going to do that. A lot of centralized exchanges, they're not going to do that. They're just gonna say, bye-bye. We had a good run, you guys made some money, we made some money, we're done. And you're gonna see a massive consolidation effort, a massive correction, if you will, when it comes to the actual level of a centralized exchange activity that is going on right now. It's going to be very, very small. I think you're going to see a very small group of centralized exchanges going into the next 5 years. There's going to be a purge. And, even if we do or do not get the Clarity Act, this is going to happen. But if the SEC and the CFTC have to step up and provide their own rules, just because, and I'm going to give you some new reasons why I don't think we're going to get the Clarity Act. It has nothing to do with ethics, something that just came up recently. This is going to be different, and I don't think we want the SEC spearheading rules into our space going into the next, couple of years into 2030, because if we don't get the Clarity Act before recess, you're probably looking at 2030, and it's not going to stop anything, because the SEC, they already have their actual plans drawn out to regulate the space. if we don't get the Clarity Act. So, we'll get into that in a little bit. Bitcoin, let's go ahead and pop up Bitcoin because we're waiting on the FOMC decision. And this is going to actually dictate what Bitcoin actually does and what the market does, essentially. $63,000. It was actually at 64, kind of robustly holding that line, but it's slightly below that. The altcoins are actually following as well, barring a couple of sectors, and we'll get into those sectors. TVL is looking pretty decent too across the board. There's some outliers like Monad that is spiking profusely. It's spearheading. We'll probably get into those little micro hits, but with that being said, Bitcoin is trying to get back up over on 1%. We are far from the May highs. We're talking May 2026, May the 11th, we're at $85,000. 82, I'm sorry. Not 85, $82,000. This is in May of this year. We have fallen. The June hit was big. Going into the month of June, we dropped tremendously. A lot of money was out the door. ETFs bled. By the way, Michael Saylor has not bought Bitcoin for 35 days, so a lot of people, followed that buyership as well. Hadn't seen Tim Cook, not Tim Cook, I'm sorry, but the actual Ethereum ETF holder, the Ethereum bull. Hadn't seen him tweet in a while. He's been buying a lot of ETH as well. Kathy Woods, haven't seen her revisements on Bitcoin's outlook as well, the next 2 to 3 years. These people that were talking a lot, Eric Trump, hadn't seen him pump ETH at all, right? So a lot of people who are bullish about all of this, they are not saying anything right now. They're very quiet. They're quiet as a mouse. Now I'm not trying to say, that's good or bad. But with that being said, we've fallen from May all the way to August. We've fallen and we're consolidating hard at 60, just above 60K. We could go below 60 if we do get rate hikes. We'll see, because that's about to drop in about 1:30 my time. So we'll go to that particular situation and we'll listen to the Fed. We'll listen to the chair and we'll see what happens, because if we do get rate cuts, they're probably going to be above 25 basis points, I believe. I mean, if you really think about what's going on in the stock market, private lending, debt across the board, the banks are in trouble. Inflation is I don't care what they say about inflation. True inflation numbers is 35%, right? So the right thing to do is to raise the rates. We'll see if he'll do the right thing, because I don't think he's going to lower the rates. So, and they may just remain stagnant. They may just come out and say, we're not raising the rates. We're going to leave them as is. That's still going to be a dull moment for the markets, So $63,000, this is what we're waiting on. Now, when it comes to Bitcoin, the actual mining outfit is pooling that I told you guys about, that filed Chapter 11. This is a major mining conglomerate. All right. They're shutting their shops down there. They were founded in Japan. They have major outlets and major infrastructure in Texas. They're shutting all that down. It's actually going up for auction. You're going to see a lot of AI probably move into these facilities because of the computational power that already exists. It's very, very easy for that to be converted into AI. A lot of computational power, a lot of power that's already connected to the grid as well is going to be used as well, because I think that power, actual extraction is a little bit higher than what you have with the miners. But with that being said, a lot of miners are going to just be liquidating. You have a lot of investors that are really shitting their pants right now, because this hits hard at the bottom. And then you have risk when it comes to these liquidations, because a lot of these actual, this particular unit, this particular mining conglomerate, Bitcoin miners, huge outfit, they had over $163 million in IOUs on the books prior to this actual bankruptcy. So when it comes to making everybody whole, that's going to be a tough deal. So this actually pulled back the difficulties, and that's basically the actual resistance levels of a miner and what they have to go through to actually retrieve a block with their actual devices. The difficulty rates are very, very high. This actual pullout of this large miner conglomerate, actually lowered the difficulty. So for those miners that are already hashing, that's pretty decent. It's a little bit easier to get to, not by a lot, but it's a whole lot easier to get to those blocks then, because you have this huge pullout. Hash rate, it's good. If you understand mining, you understand what I'm talking about. I don't want to get too techy, but the difficulty did lower. That actually was kind of a lowered just a bit. So, it's a lot of stress relief for a lot of other miners that are trying to get those blocks. So we are reaching the actual pinnacle of the actual supply of Bitcoin as well fairly quickly. So this is interesting. I want to put that in because it's not causing a lot of price action. This is geopolitics. This is ETFs. This is the actual sentiment going towards the actual Fed rate decision. This is why you see this brief consolidation just below 64K. Will it go to 59? I think it will if we get rate hikes. If we get 25 basis point rate hike, God forbid 75 basis points. I don't think they're going to go up for a point. That would be crazy. That would send shock across the board. But we will see. Bitcoin is really nervous right now. Traders are nervous right now. But when it comes to the backbone of Bitcoin, it is kind of collapsing, if you will. Lots of miners are actually sweating this new fork too as well. All right. That could take away inscriptions. That can take away the actual added income that a lot of miners are getting right now with this new Bitcoin fork that may be actually moving forward. So we know Michael Saylor doesn't like that. We know a lot of miners don't like that because the inscriptions, the BRS7, 21, all this new Bitcoin, writing within the transactions, that has added an extra level of income to the miners. They love it. It's about to be stripped away due to some security factors. And this is what the foundation is saying. There's some security factors. You have the post-quantum movement coming up. And by the way, Anthropic's new model has found a way to break even the actual, presumption of the actual quantum preventions and the quantum resistance, and people who are going, post-quantum, putting these quantum shields up. A lot of people are saying they already have the quantum resistance already up. Well, Anthropic's new model, I don't think anybody's going to be able to stop this, right? Because they just came out a report and saying that it doesn't matter what you're doing. Post-quantum, pre-quantum, there's no actual resistance. There's no shield for this. The new model has already cracked the situation. So when it comes to post-quantum protection, getting ready for the quantum actual, a brigade, the barrage of attacks that may occur, not only with Satoshi's wallet, but across the board with any type of Bitcoin wallet, essentially any type of protocol, essentially, there's no protection. This new model just basically, that was the actual outcome. Anthropic is coming out saying, we don't know what you guys are going to do, but literally there's no protection for the quantum threat. So I don't know. That's pretty bearish. There are ways to protect yourself even in a quantum arena. And I'm pretty sure you guys understand that. I just think we have to be careful going forward. Within the next 5 years, a lot of things are going to change. But I'm going to get back to the report. We're back over $64,000. We're getting built up and ready for this decision. It's going to be coming in 1:30. I'm going to be actually keeping a lookout. I need to refresh this just to make sure. It says 2:30 Eastern. I think the actual conference is going to start at 1 o'clock Central Time. So we'll keep an eye on that. We're going to pivot to that because I want to hear what he has to say. This is going to affect everything. I'm going to switch over to the actual stock market real quick. Get a good look at that because it's really, really bloody red. And it's relevant, right? It is actually, we're running parallel. Bitcoin is back tethered to a tech. I don't like I don't like Bitcoin being tethered to tech or the stock market, but it is what it is. Unfortunately, this is what the ETF vehicle has done. This is what a lot of institutions that are actually buying ETFs, they share the buyership. They're bifurcated between tech and Bitcoin as well, and stocks as well. So that's why this is actually moving and correlating at this point in time. Tech is down. It's back down again. You got Sandex, which is basically the reason why the Korean stock market keeps crashing. That tech sector, that AI bubble is popping. That's why you see the Korean stock market going through all that trouble. Circuit breakers being tripped. Like every week they have to trip the circuit breaker just to stop trading because of the avalanche of trading going out the door. 4% down for Sandex. Nvidia down almost 3%. Tech is down. AMD is down. Tesla's down. SpaceX is below IPO. The AI bubble is rupturing. Okay. It's starting in Korea. Japan is going through some major turbulence as well. Listen, tech, AI, it is busting. Whether you like it or not, the AI bubble is busting. The actual build out, the cost of build out is in the trillions of dollars. That is shaking a lot of the investors as well, because we're not even close to that. In fact, we're running into roadblocks. A lot of states are halting these AI data centers. A lot of the communities within these areas are really outspoken about it. So, and then the build out cost is tremendous. It was never factored in. And then don't get me started on the valuations. Okay. Unrealistic. So, and then geopolitics, and then the Fed actual decision today. A lot is riding today on that. You're looking at the S&P down 48, almost 1%, 48 points, almost 1,000 points for the Dow Jones. The Dow Jones is crazy. It's almost down 1,000 points. NASDAQ, which is your tech sector, it is almost down 300 points, almost a 4%. Across the board, futures do not look good as well, but we'll deal with that a little bit later. When it comes to tech, though, it's down. The bonds, don't get me started on the bonds. One of the greatest barometers ever, and everybody's choosing to ignore the bond market. Not good. That barometer is reading absolutely code red. Code freaking red. 10-year is almost at 5, 30 years over 5. And we'll move on to commodities, then we'll get back to crypto. Crude oil marching back up to $89. Brent is almost back up to $90. It is just not good. And by the way, copper is almost $7. That is the redheaded stepchild of metals that no one's paying attention to, that keeps marching up to $10. I think that is very freaking interesting. So we're going to go ahead and get back to the actual crypto market. The actual dominance is still over 50%. We're talking about just under 60% with Bitcoin dominance. It is back up over $64,000. Pretty nice pump too recently, up from 63. I don't know if somebody's getting some preemptive information about the Fed meeting, but you see a lot of money coming into Bitcoin right now, registering pretty decent. We'll see what that is. ETH is $1,900. Everything is down within the 7-day period, but you see brief little pumpage when it comes to the last 24 hours and the last hour when it comes to Ethereum. So you have some money coming back in. Maybe, possibly, it can get back over 2K. We'll see. BNB, massive news coming and going into the next year with that new L1. Can't wait to see how that's going to work out. They have announced support for a lot of interesting things as well, especially with the new Bitcoin L2. There's a new Bitcoin layer 2 that's about to get support across the board. Binance just announced its support for that new layer 2, which is going to basically enable smart contracts on a Bitcoin layer. And it's going to be pegged 1-to-1 if you stake this as well with the synthetic variety. So that particular L2, be looking out for that. That is an interesting situation that's about to occur. And if they do actually do a hard fork of Bitcoin, it's really going to get interesting when it comes to that new L2, because it's getting a lot of support. It's a fresh new L2 with smart contracts going to be enabled. And it's a Bitcoin L2. I think that's crazy. We'll see how that goes. XRP, great news. You had some updates with XRP as well. Back over $1, down 6% though. All these alts are getting crushed. You have a few that are up. You have XRP that is up almost a 4% within the actual, I think almost 2% actually within a 24-hour period. So that's pretty decent for XRP. This news is pretty interesting though. I want to get into this news, because this news is very, very interesting to me. So what you have here is a Ledger actual update, 3.2.0. This actually activated a fix as well. It's a block node upgrade. Now, here's a headline here briefly, and I'm not going to get too crazy into this, but I think it's worth mentioning, because you do see this is probably the catalyst for this micro pump in XRP. XRP Ledger has activated its fix cleanup 3.2.0, amendment making version 3.20, the minimum software release required for nodes to remain compatible with the actual mainnet. So there's that continuity upgrade. This is what I like to call it. It's a continuity upgrade. And this is what's going to be needed going forward, because the ledger is going to be used. It has been deemed a commodity. This whole situation, the XRP, it's been solidified actually. We'll get into the Clarity Act report here in a little bit. But it's been solidified along with Solana, AVAX, even Shiba Inu. This is why Shiba Inu is actually pumping, because it just came out. The SEC just re-released this information. And I will get into that here in a little bit with the Clarity Act report. Shiba Inu, which is an orphan token. I don't even know why they considered it, but it has been deemed a digital commodity. So will we see a resurgence in Shiba Inu? It's very interesting. This is very interesting. Will that pop up again and be in that narrative start rolling again? Because as far as I understand, it was orphaned. There's really no use for it anymore. And I don't even know what the hell happened to that team, but that is another story. I'll get back to this. So the actual situation that happened here, you have XRP scan data shows that the fixed cleanup 3.2 is now active after securing support for the 30 of the 35 trusted validators that participated in this particular amendment, essentially. And it's a stack upgrade. Now, here's a summary of it. The amendment received 85% support, so everybody was for this. Now, the node is running a version 3.1 at this point in time. Earlier, a new amendment actually pushed this up to 3.2. This has actually been I think initiated, if I do understand. Now, this actually fixes issues that were affecting the vault's lending and permission trading, as well as multi-purpose tokens and all those actual issuances as well. So you have a major upgrade with the ledger, which is absolutely fantastic. A lot of people are wondering. I don't want to hand clap to that too as well. A lot of people are wondering, about this situation. Now, it's not dormant. The ledger is not dormant. They're getting this thing ready for prime time. There will be more ETF action as well. It is flat right now when it comes to this situation, but I just wanted to squeeze that in. I think it was relevant. XRP doing its thing. So Solana, 73 cents, down big time, but everything is kind of micro pumping, getting ready for the actual OMC meeting. So, and you see that in all the alts, the last 24 hours, a little nice pumpage. XRP did really good with the 3% pump within the last 24 hours, but you have 5% down with Solana. Digital commodity as well. Tron, not even going to talk about Tron. I don't even have access to that. I don't know anybody who has access to Tron, but I digress on that. Hyperliquid, we're going to be talking about that here in a little bit. Major situation here. Smoldering due to the climate, but once everything clears, once we get the smoke clears, this thing is probably going to rocket ship all the way up to $100. So you're getting it at half that price right now. Do your research. Major perp RWA focused situation here. Up recently, down almost 7% though. So everything is down. Everything is down. Dogecoin, not even going to mention that. It is an enigma. I don't even understand why it's number 10, but I digress from that. It is still doing its thing. It is a digital commodity as well, as stated recently. Down 3% though. Leo, up across the board here. Zcash, just under $500. Everything is reacting to the actual sentiment of the market. There's nothing wrong with these coins and tokens. They're just reacting to the climate. Monero is up across the board, which is very interesting as well. We have Chainlink, digital commodity as well. Even Cardano has been labeled a digital commodity. No issues there. Okay, up 4%, as well as Monero. Cardano's trying to recover some things, but the dev team is going through some things. Charles Hoskinson went absolutely berserk on one of his interviewers a couple of days ago about asking him about Ethereum. He lost his shit. He's going through some issues. Hopefully Charles is going to get it together. I don't know about that guy. He's losing his shit a lot. But XLM has some great news, a week ago, and then a lot of people sold that pump, and it's still trying to recover that pump. I don't think it's going to recover that pump, but I am not worried about. I continue to DCA into this profusely because it's going to be a beast. It's going to be a monster. The sister of XRP is what I like to call it. Down 8% though across the board. Not across the board, but for the a week. Nice micro pump, trying to get some gains back. I believe all of this, even Canton is doing a little pumping as well, up almost 3%, down 1% for the week. Bitcoin Cash is going to be a big player in payments as well. It is down almost across the board. So I'm going to leave it at that so we can move into some Clarity Act, information. But again, you have Shiba Inu up across. Look at Shiba. Everybody's pumping this. Everybody's buying this. And you got to be careful because, yes, a digital commodity, but what is it doing? It has been orphaned. Be careful with the Shiba Inu. Everybody's talking about it. I'm seeing it in the back channels. I'm seeing it on Telegram. Everybody's buying Shiba Inu because it was labeled a commodity. Be careful. This can go left at any given time. So, I know whoever bought it, 8 months ago, if you kind of like bought it and put a sell trigger on it, you're looking pretty good right now. It's up 11%. So pretty decent. AVAX, digital commodity as well. Smoldering. Uniswap is up across the board too as well. So I know you're getting some derivatives from that if you're holding that Uniswap coin. They do give kickbacks as well. It's a good hold. Almost back to $4. So that is, in a nutshell, that is your market. when it comes to the fear and greed, we're still in the fear territory. People really don't know how to cross over at this point in time. Everybody's very timid and they're just watching the Fed show. And speaking of the Fed show, okay, so we're still not live there. We're still not live. So we have 30 minutes, a little under 30 minutes before we go live there. And we'll actually get to that particular situation. Now I want to get into this Clarity Act, Digital Asset Markup Clarity Act update. And we'll get into some actual videos as well when it comes to that. Let's go. This is what everybody's waiting on. But the SEC says, don't worry, we got a backup plan. We don't want that backup plan. Trust me. We don't want the SEC to give us a backup plan. I don't know about you guys, but I'm not really looking forward to that. But with that being said, let's go ahead and get into this real quick. Digital Asset Markup Clarity Act update. And we got some videos for you as well. We're going to be listening to Thune, and we're going to be listening to Mr. Atkins, Paul Atkins, with his statement on their rules that they're ready to implement if the Clarity Act does not pass, which would be absolutely not good for the market. The centralized exchanges do not want this. Trust me, they don't want this. So we're going to be listening to a little excerpt from Sean Hannity as well. Senator Thune has his remarks as well. He's pretty bullish. And then something that they're not telling you about. There's 50 states. And every state has a little group of credit unions. They've come together and pushed a letter to Congress stating that, well, we'll get to that. There's something that they want changed immediately. And it's something we've been talking about, and we thought that was a done deal. The leader of this movement of the credit unions across the United States of America, we're going to listen to what he has to say. And we'll get into what they want, because this is the roadblock that no one's seen coming when it comes to the Clarity Act. So I want to get into that. And then we'll jump into Paul Atkins' actual, solution, the SEC solution. Then we'll get into Thune as well. But this particular situation is very interesting and how it's unfolding. So this major digital legislation proposal has been pushed back or delayed, essentially. We have a short time until they go into recess, and we need to get that done. Thune says it's not a problem. Even if they have to push a bare bones versions to the actual office of the president, they're going to get it done. We'll see. I don't think that's going to happen. So here's a couple of things that I want to actually take out of this particular article, because I'm not going to go through all of it. Now, the actual co-founder of Wax and Tether said, there are 3 things I'm focused on with respect to the Clarity Act. Now, you can just say the crypto community when it comes to these devs that are concerned about this. There's 3 things that they're actually looking at. It has a lot to do with these stable coins. It's all about the stable coins. Now, the new markup is available, and it talks about ancillary tokens. It talks about the DeFi rule, the actual rite of passage from security ship to commodity ship, what you have to actually put forward, the difference between a non-decentralized token offering or a token exchange, right, versus a centralized look, what they have to do, what they do not have to do, the actual stipulations of it, and much, much more to do with AML and customer or investor protection. And then there's stablecoins as well. But this is what the actual blockchain community, and blockchain investors, these co-founders of a lot of these different infrastructures, this is what they're concerned about. Number 1, stablecoin activity-based rewards and temporarily freezing of accounts. The 2 main friction points in the Clarity Act have been Section 404, which is stablecoin activity-based rewards, and the actual 304, which is the temporary or the actual requirement for all infrastructure dealing with token issuances. Let's just go ahead and say SECs on the DeFi and the SEC range, the ability or the requirement for them to freeze accounts when it comes to any type of infractions or any type of wrongdoings or red flags. Essentially, they don't want to do that. They don't want that requirement. They don't want the smoke. I think they're just going to have to deal with it. These are mostly resolved at the legislative level, but there will be a lot of drama over these 2 provisions. As a responsible federal regulators draft specific rules and guidance to the industries and the participants. Participants, I'm sorry. I'm sorry. having problems with that word. So this is a big deal, man, that they're not talking about. A lot of these different, stablecoin providers, a lot of the actual exchanges, they don't want this burden. Tether's done it in USDC. Circle has done it multiple times. So these are large stablecoin issuers. Now, on a bottom level, when it comes to SECs, they don't want to have to deal with this shit, man. On a SEC level, whether it's DeFi or whether it's, I don't think DeFi, essentially, if it's autonomous and if it's just ran by code with no actual user or dev interactions, there's no team pushing or flipping levers, it's basically excluded from this. But most SECs are going to have to abide by this provision. They're going to have to provide investor protection. They're going to have to provide a actual mechanism or code it into where if the government or any overseeing entity says you need to stop this transaction, something's going wrong, there's some money going through this, stop the transaction, reverse it, or pause it. They're going to have to be able to do that. And they don't want that. They don't want that responsibility. Number two is activity-based rewards. Now, we did get a compromise with the stablecoin activity with this, Coinbase, Brian Armstrong, they piloted this. They were tremendously happy about the compromise. This is still an issue, okay? Active-based rewards, because there's loopholes that I told you guys about. All you have to do is run one transaction and then you could actually still get your yield like we've always done by doing nothing. All it takes is one global transaction. That basically proves that you're active. That's it. This is why the banks are like, we need to relook this. Congress is giving the Treasury, SEC, and CFTC a year to post Clarity Act amendments or enactments to jointly define what counts as active-based rewards. So they put this compromise in with no weight, with no meat on the bones. It's like bare bones legislation. The banks are like, nah, this is not going to work, guys. We don't even know how it's going to be, actually implemented. We don't know if there's any enforcement here. It's bare bones. What are we doing here? It's just a shell of a provision. So they're giving them a year to actually get some clarity when it comes to active, the stablecoin compromise. We need more clarity. We need more definition here because it's just not there. It's just an empty shell. The banking and crypto industry will deeply be involved in helping shape the definitions with this particular situation. So that is not a done deal. There's so many things that are not done. And don't get me started on ethics. This thing is not going to be passed. Now, stablecoin yield, again, Coinbase seems confident within the actual workarounds to the actual prohibition that was in place when it comes to stablecoin yield. By the way, you can still get altcoin yield on DeFi applications. This is specifically a block on stablecoin yield. Actively based rewards are not in any way the same as passive yield. A customer earns in the savings account, unquote. So what we were doing before, this provision says you can't do it, you have to be active, but there's no actual definition there. And from what I've read, all you have to do is run one transaction, like a month, and you can get the same yield. It's a workaround from this. So, the banks are like, we need to do better. So as the Security Exchange Commission, Hester Pierce has pointed out multiple times, they view payment stablecoins as essential actual tool for blockchain transactions, supporting a practical 2% net capital haircut for broker dealers, and warning that yield generation or yield generating on on-chain activities remain bound by securities of law. So if you're really thinking about it in a sense to where we're going to get clarity from the SEC, because this is not going to pass, they're going to automatically ban across the board any type of stablecoin yield. Will they actually allow it for the institutions? So that's the thing. If it's an all-out ban, institutions should be banned as well. The banks should not be able to generate yield because that's what they want. They want it all to themselves, and they're concerned about capital flight as well. So he also states, and this is another actual remark from another commissioner as well. That one came from Hester Pierce, but here's another additional remark. Another gentleman states that the payment stablecoins are necessary for transaction on blockchain rails and expanding tokenized asset businesses as well. He applauded SEC staff's guidance, allowing a reduced 2% haircut instead of a punitive 100% requirement. So the actual, issue with stablecoins a couple of years ago was we don't need them. Why do we even need them? They were a threat, so that they've did a 360 on this big time. So here's the thing about you know that you hear the notion about us being late to the ballpark. Check this out. Now, the People's Bank of China already made it central bank digital currency, which is going to be a CBDC. The digital yuan, or the CNY, interest bearing, starting in January of this year. So their digital currency is already giving out yield. They just completely bypass the stablecoin aspect. They just put a CBDC in place, and they allow you to generate yield off that CBDC. Now, while simultaneously banning private yuan pegged stablecoins, by the way, like I told you, they're not bullish on stablecoins in China, but they are allowing their CBDCs to actually be used and actually be able to, on a synthetic variety, which is the ECNY, you can generate interest-bearing yield on that CBDC. That's something that I didn't think they were going to do. They're completely bypassing the stablecoin notion. While in the States, we're embracing it on a large scale. And I think it has a lot to do with the fact that our debt situation and how the dollar is completely dying. We're kind of being forced to do this way. So with that being said, I want to get into actual Paul Atkins. And this is going to be a little small remark of what he's saying. And basically, they're optimistic that the Clarity Act will pass. But if it does not pass, we got a solution for it. And I don't think we actually want it. We don't want this smoke at all. Guarantee it.
And we're doing.
We'll back it up.
Well, I'm optimistic that Congress will pass the Clarity Act, and we're doing all we can to help them answer their questions and provide technical assistance. But ultimately, statute is the way to future-proof something. We are ready, willing, and able to come out with rules, that address the same issues.
Yeah, we're going to get into those rules. We don't, trust me, we don't want them to do this.
In Clarity and other aspects of the crypto market. And I think that it behooves us to do that, either to implement the Clarity Act, or if something should not happen in Congress, then we stand ready to provide that. But ultimately, we need the certainty of a statute that will help future-proof so that we have clear direction and to go for.
So in a nutshell, the SEC is ready to step forward, right? They're ready to come forward with their own rules. CFTC is in this as well. And they're going to set the bar. Okay. Now, I don't want this guy to set the bar. I don't think we want that smoke, because it's not going to be good. The centralized exchanges are already baking this into the cake. That's why a lot of them are closing the doors. They don't want the SEC to be all over their shit. And this is what's going to happen, because a lot of them are mischievous. A lot of mischievous activity has been going on with a lot of these exchanges to date. And a lot of them are going to be closing their doors because they don't want this smoke. All right. They would rather the Clarity Act pass, get plugged into the Genius Act as is, and then deal with the CFTC. They don't want to deal with the SEC, but that's not going to happen if the actual Clarity Act passes. I'm sorry, if it does not pass, that's not what they're going to get. So, I mean, he's optimistic. It is what it is. Some of these comments are pretty interesting too. It's like Ramika says, adults have entered the room. Just get it done and let's move on. So tired of the drama. Just get it done. So this is a passive, attitude about it, but you don't want the SEC to do this. Everybody's got fatigue. They have Clarity Act fatigue is sitting in. Everybody's like, just get it done. If it doesn't get done, they're going to basically push in a lot of BS, and it's going to deem a lot of things securities that really shouldn't be securities. We already have ancillary token definition as well, which is going to already label the majority of the altcoin securities, and they'll be able to go through the test, but a lot of them are going to fail that test. This is going to expedite that. If this guy makes rules and implements them due to the failure of the Clarity Act, we don't want that. So here's Senator Thune. Let's get into what he's saying, because he's a little bit more, how should I say, bullish about the outcome of this situation. Let's get into what Thune says.
You can get accomplished before the August. What do you believe you can get accomplished before the August recess, and then you come back in September? How imperative is it that these items get voted on?
Well, first off, I mean, we're going to do Russia sanctions, and that's a tribute to Lindsey Graham, who we all are going to, commemorate tomorrow. I think we'll get that done. And then we got to fund the government, and I think we're on a path to do that.
You don't think Chuck Schumer's shutting it down?
We'll see. I mean, I'm going to find out this week. But I think there's also there's a package of nominations. It's about 74 noms that the president's put forward that we're moving them in block. We'll do that. We will probably have a vote on the Clarity Act, which is the digital assets bill legislation that's in front of the Senate. We'll see if the Democrats give us the votes to get on that. There's also a possibility on NIL legislation. I had a couple of conversations over the weekend with people like Ted Cruz, Eric Schmidt have been working on that issue. And that's the college sports issue. A lot of people are interested in that.
I know the president has leaned on you hard. He's leaned on Mike Johnson hard.
That college bill is crazy. Yeah, I know I'm getting way off the subject, but that NIL, what he just talked about, that's going to change college football. The NIL, it's going to change all that.
You have very slim majorities. You know, in terms of his priorities, what percentage of those do you believe you can have done before the midterm elections? Because he's got a lot on his wish list.
He does. I mean, the main thing he wants, Sean, as you know, is the Save America Act, and that is something where, like I said, we've had multiple votes on it now. Not a single Democrat has voted for it. I think we continue to put him on the record.
So the Save America Act, that is the thing that's really pushing the Clarity Act, even if it gets to Donald Trump's desk. I think he's gonna put it on the back burner just to get that particular bill that he just mentioned, Save America Act. Get that across the board as well. And then there's a housing bill as well. A lot of people aren't talking about this. So even if we get proper language to Donald Trump's desk, he may push it to the side just to focus on the housing bill and the Save America's Act bill, because he's really wanting to get that particular bill passed before midterms. So we may have some things in front of proper language that no one's talking about. And then there's this situation that no one's paying attention to. Let me pull off a thing real quick. This one right here kind of like really hit me right here. So this is the credit union thing I was telling you guys about. I want you to listen to the actual chairman here of this 50-state movement when it comes to credit unions and their attack on the stablecoin, not only stablecoin issuance, capital flight, and then the actual threat of the actual passive yield, because they can't offer 4 or 5% yield on their account holders' accounts on the dollars that are holding these high yield savings, outfits. They can't do that. DeFi can, but they can't, and that's a threat to a lot of these credit unions, and they are speaking out loudly about this shit. You guys got to
talk about the NCUA, the credit unions, right? What role do you think that they should play in this kind of new age financial system? Because we talk about the banks a lot, but what about the credit unions?
I've been able to oversee all of our insured depositories. The credit unions are also going to play a vital role. Now, do we need 4,500 credit unions all issuing their own stablecoin? I dare say no, but I think they're...
I'm gonna stop right there, because see, this is something, again, they're not telling you about. The credit unions want a piece of this. Okay, and if you understand credit unions, they operate a little bit differently than your standard banking system, right? So, we don't get the high yield anymore. I know my credit union, the yield went down. We used to get some of the best yield out of credit unions, and I'm talking 10 years ago. Great yield. It was always higher than your traditional banking setup. It's not the case anymore, and they're feeling the pressure as well. Now, he just said they want no part of stablecoins. Absolutely no part. That's interesting. And on top of that, they do not like the compromise when it comes to actual passive yield, whether it be activity-based or just the whole notion in general. They're against it because they're afraid of capital flight. They're afraid of their actual account holders leaving their institutions and flocking to DeFi, flocking to crypto, decentralized applications and different platforms that offer these gigantic yield-bearing, tools and applications. They don't want that, because you know what that means? Credit unions are going to fold. Banking is going to be a massive purge of a lot of brick and mortar when it comes to financials, and everybody's going to go on chain. Who wouldn't want? I think you're getting like below 1% yield right now in most credit unions. Even a high yield situation is below 2%. On Coin Depot alone, you can get up to 12% interest or yield on stablecoin activity, USDC. That is dwarfing what you're getting in the real world. And this is a big time threat, man.
There's a role for the credit union system to play. In fact, the one thing that has long been my sort of ethos of sorts, and that is financial access and financial inclusion. How do we ensure that all members of our community have access to products safely, affordably, undergirded by sound consumer protection? And I think the credit unions are going to play a role in this. They, like our banks, must evolve to embrace 21st century solutions.
I totally agree. But see, they want to do it their way, though. They don't like the current language. They are demanding that the senators pull this back and reconfigure everything, especially the stablecoin part. They want all that reconfigured to their likings. And we're talking 50 states have come together. I bet you didn't see this shit coming. 50 states. And within those 50 states, these are credit unions that are banding together. This is a large movement saying, put this shit in reverse. We need to reconfigure everything because we are strong. We are 50 states strong, and we have a say in this. We have a lot of capital riding on this ship. We have a lot of investorship riding on this ship, and we have a lot of users as well. We want to give them access to this, but not this way. We don't want to lose everybody. This is a roadblock that has not been talked about, the credit union roadblock. So this is what's happening here. Now, this is a former NCUA chairman, Rodney E. Hood. This is the guy that you just heard. All right. Now I want to get into the actual nuances of it because this is crazy. This is the actual letter here that was actually put forth. And this came from all 50 states officially sending a letter demanding, and I'm gonna put this letter up here. This letter is demanding Congress, the senators, to reconfigure the Clarity Act to include not only credit union activity, but to rehash and rethink the stablecoin yield aspect of that bill as well. The current compromise is a no-go when it comes to these credit unions. And we're talking about a lot, over 4,000 credit unions spanning 50 states within America. This is a big movement. Okay, so when it comes to institutions, they don't give a damn because institutions are going to be able to get yield. The institutional banking systems, they're going to be able to get yield regardless. It's already wrote into the Genius Act. But they're trying to freeze out me and you. Okay. Well, the credit unions, this is a lot. I know you're seeing this shit. This is a formal letter sent to Thune and Schumer from every credit union in America. They're all moving in unison, saying you guys need to back this ship up. This is not going to work. You need to redo this and include us because we want to give our customers access to cryptocurrency, to blockchain, to the technology, to the DApps. But we want to do it our way. And we want to do it in a way that, we won't die. We don't want to put our heads in the gullet and get it chopped off by this legislation. We want to be a part of it. We want to prosper as well as banking infrastructure on a local level because that's what credit unions are. But we don't want this movement into this new era of digital finance. We don't want it to turn us into dinosaurs to where we're not appetizing to the customer anymore. We want to move along with it. We want to be a part of it, is what he said. Currently, under this current language, they are not. Because who in their right mind would continue to get low-level yield on their savings when they can go into on-chain and get double that, 2 or 3 times that? No one in their right mind is going to continue to do that. They're going to move their funds. They're going to move out of these brick and mortars. They're going to go on chain. They're going to go into decentralized finance, especially after this legislation, because there's a lot of investor protection that's going to be in place. A lot of responsibility to these devs when it comes to investor protection is going to be placed on these dev teams and in these ecosystems and in these DApps, whether there be non-decentralized applications versus your traditional, situations. There is going to be ample accountability is what I'm trying to say. I think the FOCM meeting is actually going on right now. Let me check real quick. I think we got it going on. Let me go ahead and see if I can pull this up real quick. Let's see what we have here, because I think we may have this. Yeah, he's coming out. He's coming out right now. So let's go ahead and flip over to this.
Good day. My second FOMC
Right on
committee
time.
meeting as chairman has come quickly. It's probably too early to call it a streak, but our discussions again were collegial and constructive. I'm truly lucky to work with colleagues so capable and mission focused, and so determined, like I am, to sharpen the performance of the Federal Reserve. Today, as you know, our committee decided to vote by a 9-3 vote to maintain the target range for the federal funds rate at 3.5% to 3.75%.
Okay, no rate
The
cuts.
committee is continuing its policy of making ample reserves in the banking system. The economy is showing impressive
So
resilience.
no rate cuts.
Even with recent shocks, the trends are positive and reveal solid growth. Job gains have kept pace with the workforce, and the unemployment rate has changed little. Inflation remains elevated relative to the committee's 2% goal. The committee remains resolute. You've heard this before, but we will deliver price stability. As before, the policy statement conveys just the facts. It's steering clear of forecasting, a choice we consider especially prudent at these uncertain times. Uncertainty, however, does not mean a lack of clarity. For some households, businesses, and market professionals, 5 years of high inflation have left a mistaken impression that's hard to shake, that the Fed's implicit inflation target was somehow above 2%. Let me reiterate, there is no soft inflation target. There is no soft implicit target, not on this committee's watch. There's only a target, and it's 2%. Not one of my FOMC colleagues is under any illusion. We have begun a new chapter, and we understand that the 5+ years of inflation above target cannot be cured in 9 weeks or by a single month of modest price decreases. This Fed will not waver. Our credibility rests on performing our duties and delivering on our responsibilities. Americans are right to expect that because our nation's prosperity depends on it. To the regulars here in the press room, today's assessment might sound familiar, yet there was nothing inertial about our discussions, our policy, or our strategy. 2 economic developments are worth highlighting. The first is a very notable change since our last meeting 42 days ago. Nominal and real yields are materially higher across the Treasury curve. In fact, some of the increases in market interest rates between FOMC meetings are among the most significant in the last 2 decades, ranking around the top decile or so. But if the committee didn't change its policy rate, what happened? In the intermeeting period, market attention centered on real data and real economic developments. Prices reacted in real time to incoming information, and the reduction in forward guidance may have been a factor. Market participants are learning to play the ball, not the referee, and market prices will continue to respond in the direction and magnitude they see fit. This is, in my view, a change for the better, and we're just getting started. After all, the central bank need not always and everywhere be the center of attention. I understand the desire for rolling forecasts and commentary from this committee, but for our part, we need to observe market reaction to developments, direct and unfiltered. I want to stress, of course, that decisions by this committee matter a great deal, and where necessary and appropriate, we will not hesitate to act. A second economic development is one that I noted at the congressional oversight hearings this month, but it's worth repeating. The most striking feature of the economy is the strong growth of business investment. The surge in high-tech CapEx has been remarkable, but that does not necessarily make the Fed's role any easier. In the AI-related category of high-tech equipment and software, the most recent data shows 4-quarter growth rates of nearly 20%. This is helping to sustain the healthy momentum of manufacturing output. More generally, CapEx is preparing the ground for future growth. Nonetheless, the precise timing and magnitude of
kind of got a delayed reaction when it comes to
remain
Bitcoin.
hard to predict. FOMC meetings produce
Some
policy
registered
decisions,
selling.
but just as important,
You do see some selling coming in. A lot of sales are coming in on the books
of
here.
the big things
We'll
that
see.
matter most.
I don't think it's going to be too dramatic. I mean,
That
we're
too
not
is
getting
a
rate
priority
hikes.
in this new chapter. At the
They're going to just keep them the same. So,
In
I mean,
our
you know,
meeting,
that's not
vigorous
bullish at all, but,
discussion
you know, it's
centered
not
on
bearish
four
either.
questions,
Everything,
which I
I
will
think this was
enumerate.
baked into the cake.
First, we talked a lot about the implications of the past 5 years of high inflation on the current policy conjuncture. To echo an old phrase, has the past really passed? Second, my colleagues and I considered the economic shocks of recent years, strained supply chains arising from the pandemic, military conflicts, energy supply disruptions, substantial increases in tariff
Okay, so
rates,
we got
yes,
what
the
we
surge in AI-related
came to
investment.
actually hear. So we're not going to get any type of rate cuts or hikes. They're going to just remain stagnant. They're going to keep them where they are. So, you know, that's going to be, you know, some people see that as bullish, you know. Some people are going to see it as bearish. I do see some sales that are actually being registered and some buys as well. It's kind of like a mixed bag. I think we're going to consolidate at 63. Barring anything that actually goes into effect geopolitically overseas, if everything gets, you know, stays stagnant there, or if it increases when it comes to, you know, the bombing and all that, you know, good stuff. But as far as the FOMC meeting, the inflation talk is BS. It's way higher than they're saying. But with the actual rate being stagnant, they're not going to push it either up or down. You know, at least we know what we're dealing with. And I think a lot of the actual market has already baked this in. Now, as far as the stocks, let's go ahead and get into the stocks things, because it's still, the Dow Jones is crashing essentially. That's what's going on with the Dow. It continues to sag. It's almost 1,000 points down. NASDAQ kind of pushed up a little bit. You know, it's pretty decent. Those rate cuts are going to be stagnant. NASDAQ is trying to recover a little bit, but Dow Jones is pushing 1,000 point reduction right now at this point in time. Bonds are stagnant. Oil is continuing to rise as well because of what's going on in the Middle East. So, you know, stocks don't like it. When it comes to the actual crypto market here, Bitcoin is actually a lot of it was not bad at all. If you really look at what's going on here with Bitcoin, not bad at all. I'll put it up here. There's a lot of buys coming in. You did get some sales, but you know, it's kind of a mixed bag. The money flow is increasing slightly. So this is not as bad as we thought it was going to be. A lot of people were predicting, you know, rate hikes. I know I did, but the fact that they're remaining stagnant, this is what I take. This is my take from what Warsh has said. They're afraid of raising the actual rates. Any type of rate hikes is considered, it's going to break the country. If you go up 1%, let's say if they went up 1%, that would break the country essentially. That would completely be catastrophic. And I think they're scared to raise the rates. They can't go down because that just exacerbates the issue. So raising the rates is the right thing to do, but they don't have the balls to do that because it's going to break this country. A 1%, just a 1% rate hike would break this country. This is how bad it is right now for Americans. Their pocketbooks are losing jobs. Inflation is crazy. Everything is going up in the stores. Gas is continuing to go up. Geopolitically, that mess with both of the straits being closed top to bottom, you know, the oil shortages when it comes to our reserves, it's just going to get worse and worse going into the latter part of this year. So raising the rates is, they got to have balls to do it. And I don't think that guy has the balls to do it. That's the correct way. There's going to be pain. In order to get us out of this correctly, there has to be pain. But they don't think Americans could actually take the pain. This is why I don't think they're going to raise these rates. I think they're going to continue to BS the situation and consolidate where it is right now. Now, the mortgage rates are going to continue to go up to 7%. So, you know, mortgage wise, it's a mess. The banks are dying right now because of the debt, the commercial debt versus retail debt when it comes to actual mortgage defaults. Foreclosures are at all-time high. People are turning in their cars. When it comes to the banks, it's bad. That's why they need this language. They want stablecoin yield for themselves so they can actually weather the storm going into 2027, because it's going to be a very bloody year for the banking systems because no one's paying their bills. And don't get me started on credit cards. People are just not paying their credit card bill. I was looking at a chart about that. It's at an all-time high, defaults, when it comes to missed payments. And people are just continuing to charge up their cards and they're not paying their bill. That is going to hurt in 2027. We got those earnings reports, but those reports mean absolutely nothing. I'm waiting for the actual fourth quarter reports of 2026 and 2027, because that's where you're going to see the truth. And it's going to be all red. Okay. So the Clarity Act is going to be very bullish if we get it passed in the current state, but I don't think so. These credit, and we did get an update too, by the way, while we were listening to Wars. I want to get into that because we did get an actual update on the actual Clarity Act. 7 to 10 Democrats are ready to vote for it. I think that's all we need. Let's go ahead and get to that.
Now for a year, because the Democrats want to put in place guardrails that prevent the president from.
Let me back this up, because we have 7 to 10 Democrats that are already signed and they're ready to go. I think that'll do it. Let's listen to what this guy has to say, because this is a new report that just came out about 5 minutes ago.
Issue now for a year, because the Democrats want to put in place guardrails that prevent the president from continuing to make literally billions of dollars from an industry that he regulates, and the president doesn't want anything that would cost him money. So how you sort of thread the needle there is what they're discussing behind closed doors. Tom Tillis, Republican of North Carolina, is working with Ruben Gallego of Arizona, the Democrat. They are trying to come up with some kind of compromise legislation to send to the White House this week in hopes of unlocking a deal. There are 7 to 10 Democrats who sound like they want to ultimately pass a bill, but this is just very hard.
Sound like they want? What the hell does that mean? Sound like they want to. Yeah, I think this is a false report. I think this is false hope. I thought it was a little bit better than this. I take this as false hope. So sound like they want to vote for it. That means that's BS, man.
Them politically, even if they like the underlying bill, they're going to face challenges in Democratic primaries from their own base, saying, "Hey, you just backed legislation that the president that they don't like."
See, that's a good point. A lot of these Democrats, they know they're going to lose. If they vote for this, they're done. Politically, they're done.
Wants at a time when he's making literally billions of dollars. Now, I think one of the things that they've been discussing is whether there could be a more independent way to enforce the new restrictions on the president,
right,
which would require him to either have a blind trust or just divest his holdings. But it's really hard to see how you can get the president on board with that.
Yeah, absolutely. Trump's not going to sign it. He's not going to sign this bill because from what I've read, it completely bars not only the president, not only political officials from issuing tokens, right, or partaking in any type of DeFi, but their kids as well. It bars any of the family members, anybody that's married into the family. You can't touch it. You can't touch crypto. You can't touch blockchain. You cannot issue a token. You cannot deploy an application or an ecosystem. You can't be a part of that. And this is what really adds. They're separating this new provision when it comes to this. They're separating the actual enforcementship. It's not just going to be on a federal level. They want state level attorney generals to have power to prosecute Israel as well. And this is what the president does not like. They don't like that. And I think that's great. But this is what the Dems want. It's like we need to separate the enforcement power. We just don't want federal officials to be able to enforce these guidelines. We want it to be on a state level as well. We want the state level attorney generals and prosecutors to be able to seek prosecution and to enforce this as well. That separation of power. I think that's needed to keep it honest, right? So this is what you have here. This is what we're dealing with, and it's freaking wacky. This whole thing is getting out of control. I don't think we're going to get it, and if we don't get it, we're going to have to deal with the SEC. And I want to bring this up right here because this is what the SEC is basically looking at now. When it comes to what they want to do, they already have this set up. It's already marked up and wrote up. They're going to put this into place. So I want to read a little bit of this because they have a large block of actual blockchain coins and tokens that are already considered commodities. They have commodity ship, and they're going to be able to fly into this legislation wing going into the 2027 very, very easily. I think these are going to fly too as well. They're going to be able to go along with their actual roadmap very easily without any restrictions. And I think they're great investments because they're really, really close to their all-time lows. Some of them are very, very close to their all-time lows. But here's the digital commodity aspect of what the SEC is going to push if we don't get the Clarity Act. Now, a digital commodity, and I'm going to read this because a lot of you understand this. A digital commodity is a crypto asset, guys, that is intrinsically linked, and it actually derives its value from the actual programmable or programmatic operation of the crypto system that it is functioning in or within. So we're talking about a coin that's like autonomously tethered to the infrastructure that in itself is running autonomously. Okay, code, no interaction with the team, no levers being flipped, no functional marketing going on at all. It's Bitcoin. Just think Bitcoin, right? That is the principal actual model of digital commodity, Bitcoin. So as well as supply and demand dynamics as well, that factors in. So there can be no meddling with the supply or demand dynamics. Again, marketing, team interactions, right? The team cannot have keys. They cannot have any actual ability to alter any part of the infrastructure. It is a closed loop that is entirely ran by code. This is your digital commodity ship. Now, a digital commodity does not have intrinsic economic properties or rights, such as generating passive yield as well, or conveying rights to future income, profits, or assets of a business enterprise or other entities, promissories, or obligators as well, but may have certain other rights as well, as discussed below. And there's a lot of different, different aspects to this as well. And I'm not going to go into all that, but these are some examples that have been stated under the SEC rule that will go into place if the Clarity Act fails to pass this year. Okay. Now, a lot of the actual tokens and coins that are included in this commodity block are going to be Aptos, AVAX, Bitcoin, Bitcoin Cash, Cardano, Chainlink, Dogecoin. I don't understand that, but Dogecoin's in there as well. It kind of makes me think that Dogecoin has a secret pathway to usage going forward that we don't know about, but it's included in this digital commodities block. All of these are going to have exchange trade products and ETFs going forward too as well. That door is wide open for all of these. Ethereum, obviously, age bar is a commodity. Litecoin, Polkadot, Shiba Inu, which is crazy. Solana, Stellar, Tezos, and XRP as well. This is it. All the rest are securities. Think about that. All the rest of the altcoins are, securities, and a lot of the ones that I know have team interactions. Okay, the coins are not shielded. It's not a closed loop, right? So a lot of your favorite altcoins are going to be deemed securities under this rule. The examples that I read that just read to you, these are coins and tokens that exist in closed loop ecosystems that are running autonomously. They represent an infrastructure that runs merely by code. Very interesting. I don't know about Shiba Inu. That's the thing. This is what throws me a loop right here. Why is Shiba Inu in here? It is not a closed loop situation. I know that the contract is renounced, right? So they can't meddle with that particular supply or whatever. That was a big thing back 5 years ago, but it is very interesting. But this is what's happening. This is what the SEC is about to do. If we don't get the actual Clarity Act passed, they're going to deem a large block of our altcoins and tokens as securities. That is going to cause a lot of the devs that are actually championing and actually pushing or marketing these type of coins and tokens. They're going to shut up shop. They're not going to register with the SEC. I'm going to tell you right now, a lot of these devs are going to run away from the space. They're going to be here today and gone tomorrow. They're going to David Copperfield your ass. They're going to just disappear. You're going to be wondering, where's the dev? What happened to the TG? What happened to the Discord? What happened? Well, the SEC happened. The failure of the Clarity Act happened. And even in the Clarity Act, ancillary tokens, those are securities as well. And that represents and makes up a lot of the altcoins in the market because they don't move like Bitcoin. They don't move like ETH. They're not autonomous. They have they have a team that's behind it, pushing it. They have access to the back end. They're manipulating the particular ecosystem. It's an open door. That is a security. And a lot of altcoins make up this block. So when you are security, there's a lot of things that you have to do. You have to register with the SEC. You have to provide, reserve notions. There's audits that have to be done, right? There's compliance fees. Okay. There's oversight. They have to leave the open door to the SEC. There's AML, investor protection has to be put in place, especially if there's a wallet involved, any type of infrastructure there. If there's a coin or a token that's tethered to these securities, that is a whole nother issue right there. You're going to see a lot of devs drop their coins and tokens just so that they have to deal with that smoke. And they're just going to run their infrastructure and close it up so they can pass the test, so they can move to actual CFTC guidance. That's going to exclude a lot of you from your coins and tokens that you hold. You're going to be holding some of you are holding a coin or a token that's going to be orphaned soon, because that's the quick way to commodity ship. Kill the token, remove the token from the equation, remove the coin from the equation. Then you're good. If you're just moving a product into the market, you're a commodity. If you're closing that loop and just running code, you're a commodity. If a lot of decentralized applications are closed loops, they're just code. They're just a DApp running autonomously that you interact with. That's a commodity. This is about to change the space completely. This is why you see a lot of centralized exchanges closing their doors, because they're going to be deemed security outfits as well. Because a lot of them have tokens and coins that are associated with their centralized exchanges. That is a security. Also a conflict too as well. They're going to have to register. They're going to have to provide a lot of information. They're going to have to open the door up to audits. They're going to have to open the door up to the SEC. They're not going to do that. They're going to run. They're going to post their exit on X, and they're going to tell you they're sorry, and they're going to tell you we had a good run, guys, but we're done. We're not going to deal with this shit. The space is about to change. This is why I'm telling you this. It's not going to be the space that you've grown to love for the past fucking 8 years. Those days are over. Completely over. So get ready for legitimacy. Get ready for the real market that we're about to, the new normal, right? Forget about the trends. Forget about the cycles. That shit is over. Okay? That's over. New normals are coming. The new way of doing business in the crypto space is coming. Even Bitcoin is about to change. You got a horror fart coming up. You got an L2 that has endowed smart contracts. That's coming up as well. Bitcoin is about to turn into a whole new beast. This is why a lot of the miners are filing for bankruptcy. Okay? They're in the red. I told you about pooling over $125 million in IOUs. That's crazy. So everything is about to change. So, I'm going to close it here. I'm going to do the giveaway. I'm going long here. I got to get off here, but there's a lot that I want to get into today, but I'm just not going to be able to get into it. So I'll put it in a standalone video. I'm going to be talking about some alts, some InfoFi alts, some coins that really don't need this language to succeed. They're going to do very well, regardless of what happens with this language, regardless of what happens to the SEC. I'll put that in a standalone member video for my members, because I'm not going to be able to get into it on this live stream. So with that being said, let's go ahead and get into this giveaway. All right, so we have the wheel populated. I gotta make sure I got everybody on this thing before I get it. And yeah, it looks like it. Hold on. Let me see here. Just a sec. I want to make sure I got everybody on this wheel. Let me see here. Yeah, I see that, bro. Let me go ahead and fix that real quick. That's kind of weird. Yeah, that's weird, Jay. I don't know why that was like that. So we're fixing that right now. You have a lot of duplicates. Yeah, that's crazy. All right, I think I fixed it, bro. Let me do a quick refresh and I think we're good. So we got Raul, Logan, Riverside, Crypto for Retire. We got La La Land, Olivia, Rami, Cherry, Enchant, 987, Crypto for Free. Oh, I gotta take, there's another duplicate right there. All right, BB, let's see, we got Mac Yank, Crypto Joy, Wanderer, Steve Hogg, Sammy, Colleen, Melina Rupin, Jacob Anthony, Beloved Summer, Crypto Priest, Tim Shea, Scott, Cruti, Capisano, Carlos Xavier, J Thacker, LMFG, and Crypto for Retire. I think we need to take that Crypto for Retire off because that's a duplicate again, and I think we're good, bro. All right, so let's spin this puppy. First one's gonna be Colleen 960. Colleen 960 is the first one. Let's go. We need two more. So it's going to be Rami 90158. I haven't seen these two on the wheel in a while. So Rami 90158. That's going to be the second one. Let's get that last one. Looks like the stock market is starting to rebound. They enjoyed the news about no rate cuts or hikes. I think it's going to be Enchant. Okay, so Enchant 987 is going to be the last winner. So let's go ahead and do a recap here, a little quick recap. So we have Colleen 960 is going to be the first winner. Absolutely. Rami 90158 is going to be number 2. And Enchant 987 is going to be number 3, and that's going to wrap it up. And obviously, all you have to do is become a member of the channel and check out the content, the weekly content that is dropped, and just comment on it, and I'll take your comment and I'll put you on the wheel. And then we give out SOL every week during every live. So you guys know what to do. I just need that SOL address, and we'll distribute those rewards. And I'm going to try to do it before I actually start my route as well. So I can get you those rewards a little bit earlier. I've been kind of late on those rewards, usually the next day. But if I can get your wallet pretty quickly, we'll get it to you pretty quickly. All right, so SOL, we're giving out Solana to the winners. And again, hand clap to you guys. Let's get a little market report real quick before we get out of here. So Bitcoin is, how should I say, a little micro pump. It's trying to get back over $65,000, up 2% within the last couple of hours here. Within the last hour, actually, up 1% actually. So some decent buyership here. You can see the little candle here. They Bitcoiners like the news when it comes to the whole entire market. Again, we'll see. We'll see. Within the last hour, there's been some micro pumping. XRP is trying to get back up to 110, but you do see some, a slight little bit of happiness because there will be no rate hikes, but we're still not going down. We're not going down. Now, as far as the actual stock market, just quickly, tech really enjoyed the news as well. NASDAQ is pushing back up over 200 points, which it was down almost 400 points. Dow Jones is actually stagnant right now. It is continuing to be below where it should be. It's almost 2% down. So tech is starting to rebound just a little bit. But when it comes to Korea, I'm sorry, that AI bubble is popping. So, again, a lot of those trending stocks last couple of weeks when it comes to tech and AI, they're down. because that bubble is rupturing. So with that being said, we're going to get out of here, man. You guys have a great day. Watch. I wanted to get into a lot of alts info. I wanted to get into that as well. Be mindful of Hyperliquid. That is $100 to $150 coin. Going into the next 2 years, do your research on it as well. I don't want to go too far into it, but there's some other things that I want to get into, but I'll save that for a member video. All right. Have a good one, and we appreciate you guys coming by. All right. Take it easy.